Ladies and gentlemen of the crypto space, we're live on a Monday, September 27th at 12:40 p.m. A little busy today, sorry. About an hour late for my typical time, but it's all good. We get together today. We still get to talk today. We still get to figure things out today. We still make better decisions today. Every time we get together, we're able to figure out why people are doing what they're doing and how we can do things just a little bit better every single day. I don't have much to show you today. We'll look over charts. Things look a little bit fragile. I didn't even put up the big screen to start off the stream. What's going on with me? Productive assets on the books, the crypto business model. It's an age old topic that I talk about at this point, but my goal for myself and my goal with the stream and all my social media is to encourage people to think about these markets very differently. Because what are we looking at right now? We're looking at the S&P. You open up a brokerage account with Fidelity and you buy some stock. Oh, I'm cool. I bought some stock. Schmucks have been doing that shit for the last 200 years. I'm tired of the same old shit that everyone's been doing. Gotta do things different if you want to be different. Otherwise, you're just like everyone else. So I think a little bit outside the box. And clearly, I get belligerent and I yell a lot. But so let's talk about this generally. We talk about the business model. We have assets. We have productive assets. What kind of assets are they? Are they securities? No, they haven't been described as such. Are they REITs? Well, REITs are a form of a security, and they're not because they're not registered as REITs. Are they dividend bearing instruments? No, because they're not on a stock market. They're not traded on exchanges, and they don't go through the SEC. Are they commodities? Are they whatever they are? They're productive assets. They generate revenue. Basically, they're tools for a business. It's basically a subsidiary. You're a part owner in a business. That's what I like to call it. So, my opinion is every time you own one of these things, you're investing in your business. You're investing in yourself. These are assets on a balance sheet. They might as well be subsidiaries for how folks think of them. And what are we doing if not trying to think different? You think different, you're going to get different results. That's the bottom line. Let's see who's in the stream. Andrew's in the house. Good morning. I'm okay. Hilda, what's up? I'm okay. Igor, Johnny Fur. Hi, howdy. Haven't seen you in a bit. Final year time zone. Yeah, I'm a little late today. It's all good. Killis in the house. Voiko, everybody. Enoch. Well, what's up, Noah? Great to see you streaming. Yeah, back in action. Well, I'm always in action. What am I talking about? I started this AskVid last night. I got my first video up. I posted it on Twitter. This is where I'm going to show very specifically a play that I'm doing, or a particular portal or a protocol that I'm interacting with. And in this instance, I'm on Arbitrum. I have a MIM position. I deposited it on Curve, and I am farming on Abracadabra because they are incentivizing the liquidity of MIM and stable pairs on Curve, and that is relatively lucrative. 20 bucks, 20% base APY in the pool position, and 40 something, around 40% APY on the incentivized returns. So that's cranking out returns on cash, stable coin yield. So this is a cute video. I intend to do these more. It's a relatively discounted rate compared to the Discord forum. It's $10 a month compared to the Discord forum, which is $40. But I think it's going to be useful and hopefully meaningful content that will help people see things that I've done, and folks can consider things that I do. What I do isn't necessarily the best thing to do, and it certainly isn't the only thing ever to do. There's a never ending opportunity and places to deploy capital in strategic and creative ways. So, at least this type of content is something to refer to. It's a reference material. Let's go over to some charts while I talk about your guys' comments in the background. Do you have any investments that are not productive assets that are just holds? Well, holds for what purpose? To sell? Why am I going to hold something if I ultimately have to sell it? That doesn't make much sense to me. If might as well be playing a stock market if we're going to do stuff like that, because then you're going to have a significant capital gains tax that you can't necessarily write off, depending on how you look at your business operation. It's all gray area in countless regards from a tax perspective, but clearly, if you're going to buy something low, sell something high, there's a capital gains involved, no questions asked. And that's some shit that I have no interest in. Or do you specifically avoid anything that can't generate yield? Yes, correct. My entire portfolio is currently yield generating. Everything from new assets to old assets. Everything is being put to work. I have zero interest in an asset unless it has a revenue stream. Dylan, no, my man, always brightening my weekend. Glad to see you. It's a pleasure. It's the start of a good week. A lot of interesting things going on. I think the charts look fragile. I'm hopeful they hang on. We talk about macroeconomic conditions a lot, and really Luke Roman is what I predominantly agree with. And I think the Fed is in a very big polar situation where they only have a binary choice. Um, it's going to be volatile. Expect some serious volatility. When I talk about the business model, it's partly because of a degree of conviction we kind of have to engage with these markets. You see a 30% drawdown, most people are freaking out. Legacy finance is freaking out. 50% drawdown in legacy finance, and people are, you know, they're not very happy. They stand at the top of buildings with bad thoughts. But in the crypto space, that's not, it's not what the volatility that we want, but it's the volatility that we've experienced. And I would argue that's volatility that we're accustomed to. We know how to navigate, and it's not unexpected. And I have my strategy, my plan, my course of action, and I have my conviction in productive assets that are basically a business. Boom. Now, if that's not a different way of thinking, I don't know what is. Foo Bears in the house. A pleasure. Quantified. They know. Have you heard the news of Cody using Cardano stablecoin? It'll be used as gas on all transactions on Cardano. Cool. I look forward to Sunday Swap, and I look forward to seeing what kind of incentives are thrown around. I look forward to seeing how the bridges operate, and I look forward to the productive assets that emerge. As of right now, there's zero opportunity. And because I avoid speculation, I have no interest in a speculative opportunity. I have interest in productive assets. So when productive assets emerge, I sure as heck am going to weigh my opportunity cost. But as of right now, there's zero opportunity in on the Cardano ecosystem. I don't even think that's my opinion. That's just a fact. Because speculation is an opportunity. Speculation is speculation, a potential opportunity. But when you're generating revenue on a daily basis, that is factual opportunity. I operate in a world of factual revenue. At the end of the week, can I make $5,000? At the end of the week, am I going to make money? That's an opportunity. If at the end of the week, if I buy an asset and it goes up and down and left and right, and my goal is to sell it, that's not factual opportunity. That's I maybe will make money. That's speculative opportunity. When you're generating a revenue stream, that's factual opportunity. So you can compare your current situation to another situation and assess if an opportunity cost exists. That's the bottom line. You can stake it for up to 25% APY earning fees. Great. 25% sounds like a fair amount of opportunity cost. And I look forward to seeing it and how it functions. Because you also got to remember the protocols on Cardano are just starting. So there's going to be a lot of risk on the platform. The protocols on Ethereum and the other chains, EVM compatible chains, have had almost 2 years to work out the nuances, the kinks, the edge cases. So I'm never early, never late, and I certainly will not trust new DeFi protocols on Cardano, on Elrond, or on Flare until time pass. I am not a guinea pig. I am not going to risk my capital. I'm going to wait for other folks to risk their capital. So don't be a degenerate. Take your time. You don't need to be early to everything. You want to minimize your risk while maximizing your returns. More lobbies in the house. Daniel, a pleasure. Dan, thanks for the details. You're welcome. Joe, is yield currently? Of course it is. Yield is income. If so, is that supposed to change in 2023? Unknown. We're in a very gray area with how to define and describe the activities that you're engaging in. Um, People are interpreting it different ways, and many folks know how I'm interpreting it. I define all this activity as particularly the assets and the positions I take. I structure it as a business. I have productive assets. I have a balance sheet. I'm reinvesting in my business. I take profit. I have a salary. I have a treasury. So I've structured and I define my activities as a business. Now, plenty of people's activities are clearly definable as speculation, which is very much more consistent with traditional ways of interacting with stock markets. And I think that is not my cup of tea. That's not what I do. Food Bear, debt ceiling fight will probably inject some volatility. September 27th, they got like 2 weeks to figure their shit out. It's a hot mess. Damn right I expect some volatility. You can see things roll over 20%. I don't think we'll see I don't think we'll see a 20% roll over the stock market, but look at that. The weekly to the 100 SMA, 3,500, 1,000 points. That'd be a heck of a drop. Um, uh, you know, that'll probably encourage interventionism because the general public can't handle that kind of depreciation. What's 1,000 points on 4,500? 25% at 4,000. So it's less than was 20%, 15, 20%. I think they'll be crying. They'd be crying. But in 20% of the crypto space, okay, Monday. Crypties in the house. Always a pleasure. Hope all is well. Lots of stuff going on in the markets, and it's been a heck of a road since we last talked. So you know, it's all good. We still got the party going here. We're still talking shop. Always welcome. Dylan, in crypto, we call a minus 20% drop a Tuesday. Now you're talking my language. I agree. Sir Joe's in the house. Digiverse. Ren look like it wants to break out. Break out, break down. It was at $1.70 at one point. I've seen it at 3 cents. And now it's at a heck of a price point. I think Ren is operated by FTX Exchange, and it's going to be the predominant bridge that they're going to use for their organization, particularly Solana. And I believe a huge amount of capital will flow through it, be it from other chains like Bitcoin or even Ethereum. But those are platform assets, but also ERC20s and tokens. And there's plenty of ways for the bridge to capture transaction fees from immense capital flows. And you guys know the way I talk about capturing transaction fees and cross chain capital flows. That's a productive asset, baby. That's how you get them revenue streams. Yes. Mike Pye, hey Noah, any opinions on Flex USD? There's always an interest bearing stablecoin. I mean, Arbitrum? I mean, an interest bearing stablecoin. I'm making 38% on $23,000. 38%. That's pretty much an interest bearing stablecoin, but it's more than that because it's Arbitrum. The factory pool. So it's another 23%. So 23.18 plus 38, 30, 40, 50, 30, 50%? No, 60%. Yeah, I'm getting 60% on $24,000 pretty much, give or take. All right, I'll take it. When the numbers change, I'll do an opportunity cost analysis and I'll adjust accordingly. But if I'm cranking out that kind of returns, this is probably one of the more interesting stablecoin positions going on right about now. Arbitrum, curve on Arbitrum, abracadabra on Arbitrum. Wow, 64 million TVL. Abracadabra's on a tear with regard to people taking on MIM debt. And that's obviously why I briefly showed the spell chart earlier. This is dollar denominated, point 0.36 cents, a fraction of a penny. You guys know my opinion. It's a heck of a productive asset. I expect it to be extremely volatile. Why? Because it's up huge, so there's no reason it can't have a significant retracement. There's no reason it can't actually go 10, 12x on the money and catch up to MakerDAO. And that's the whole point. What's nice is that it's a very liquid asset. There's a high quantity of them in circulation. So it's free floating, and people have a capacity to push the price up and down, and that means it's a natural market. And that's imperative for an asset to be in a natural, free flowing market where yield is liquid. And, that plays into like Curve. Curve is a decaying hyperinflationary asset where there's less emissions over time, and actually a secondary protocol. Convex has created the disinflation and transitory deflationary pressures. So you can have cash on a weekly basis. There's nothing for your positions. Your assets are doing nothing for you unless you're generating weekly revenue. Can you pay your car bill? Can you pay property tax? Can you pay a mortgage? Do you have cash at the end of the week? If you're not making money with your assets, real money at the end of the week, what the heck are we doing? That's the whole point, or at least one of the major points that I like to get across. This isn't a game. This is a business. Treat it like that, because most people don't. Most people put money in. They like in 2017, they watched it go vertical. They watched it come down. They had no idea what to do. You got to figure out what to do. You got to make these big, grandiose, intricate, sophisticated choices and really understand how to do things differently. Anyway, my 2 cents. My 2 cents. Bradley, hey Noah, started watching you a few months back. Took your advice and started learning DeFi with Aave, then moving the Polygon curve because there's low fees. Polygon's still the cheapest fees in town. Arbitrum's pretty cheap, couple bucks here and there. Phantom is cheap too. Avalanche is a good price. Everything's cheaper than Ethereum L1, where it's like $100 a transaction. You know, but that's where all the opportunity is. The big opportunities on Ethereum L1, particularly Convex, which is basically I would argue Convex is a currency, not Convex, Curve is a currency producer, very consistent with MMT in many regards. We'll see how that story plays out in the coming years. Bradley made a few $1,000s in the HI crypto, and just this weekend moved my entire position to staking Curve on Convex. I really like the interface, and it's very easy. Yes, it is. Good old Convex. Let's see what the yields are like. Let's take a look real quick. Early stake. 66% return on your money. $197 million locked. Pretty good. Pretty good. That's a heck of a productive asset, especially when we consider it's disinflationary and, more importantly, transitorily deflationary. That's a heck of a monetary policy. Deuces from the Crypty Girl. Bradley, you are totally right that the best way to learn this stuff is to give it a go. Find your conviction. Pick something. Play around. Throw some stable coins on Aave. See what the returns are like, the yield. Aave's a bank. Use it as a bank. Why not? And just play around with stuff. It's all good. It's not going to bite. And you spend a couple bucks, spend 20, 30, 40, 50 bucks experimenting to figure out how it works, and then you can make better choices over time. More lobby thoughts on Aave Curve launch this week. They're throwing around hundreds of millions of dollars. So I like to say the best play on Avalanche is going to be Curve. The best play on Phantom is going to be Curve. The best play on Arbitrum is going to be Curve. The best play on Ethereum L1 is going to be Curve. It's one protocol that traverses platforms. How about them apples? That kind of changes things, doesn't it? Noah, my man, any thoughts on Benki leading platform? Yeah, I know Benki. Well, they're about to get some serious competition-y. Benki is Aave. Aave does the same thing. So Aave's going to launch, and they're going to get hundreds of millions of dollars of incentives, and a huge amount of liquidity is going to flow over to their platform. Dylan, did you see Sailor tell Raul that also securities and that he basically doesn't know the law? Saw it from BTC. Well, no one knows until it's defined. And no matter what it's defined as, it's obviously productive assets. They're not REITs because that's dealing with real estate. And some of these protocols dish out 100% of returns. They're DAOs. So you basically own the company, but it's not a dividend. So what is it? No, this stuff isn't defined. It's very gray area. I like Raul the way he talks. I like Raul because he's very open and he's like, we have no idea what the hell we're dealing with here. So that's a very interesting take. Very refreshing to hear. Saylor has a lot of good ideas and he rightfully talks about Bitcoin as a store of value and altcoins as basically technology. And I think that's spot on. And everyone's entitled to their own opinion how all this stuff is going to be treated. He's not going to define things as securities, and there's only one agency in the entire country that could define something as a security, and that's the SEC. But I bet my bottom dollar the CFTC is going to want to fight over that because they're going to want to control the markets. And I bet there'll be a lot of lobbying and a lot of legal pressure from the crypto community for things to be defined as best possible. Some of this stuff isn't securities. Some of this stuff isn't commodities. Some of this stuff is downright novel. And it will take years to sort that shit out. Um, Curious as to what opportunity cost you saw with the sushi protocol. Sushi does not generate much yields. It's not very lucrative. That's the opportunity cost. Thoughts on Akash? I don't have a capacity to provide an opinion. I am in the same farm for Spell and Arbitrum. No point of buying when you can farm risk for using stables. Yeah, well, it's complicated risk assessment of how you want to structure your balance sheet. Um, you know, and that's always going to be subjective. You guys know I've told you guys the structure of my balance sheet, the percentage representation of various assets. And I'll give you a brief rundown. Uh, Everyone probably finds that useful. Curve 48%, Spell 20%, Ren 11%, Popsicle Ice is 6%, Cosmos 6%, FXS 3%, Polkadot 1%, Keeper KP3R 0.56%, Bancor 0.96%, and a bunch of other stuff. Bunch of other little stuff here and there. So that's the high level. That's it. 90% of my portfolio is 6 assets. Hey Noah, what is the play when Aave launches an avalanche? You could do the same thing we did on Polygon. So you put in collateral assets on Aave, you borrow stables, you put the stables back into Aave, and you're generating returns as such. Nowadays, I wouldn't do anything like that. So, in my opinion, the play on Avalanche is Curve, which basically is the same play on Ethereum, which is the same play on Phantom, which is the same play on Arbitrum. It's the same play on all protocols. So, there's no play to be had on Avalanche because you're already in the play that's going to benefit from all the hundreds of millions of dollars thrown around on Avalanche. I expect billions of dollars of capital inflow into the Avalanche platform when Curve and Aave launch. Um, Things are going to get competitive for Benki when Aave launches. Do you think the meme culture of asset like Spell could hold its back, reaching full potential? Fundamentals make it a no-brainer. Yeah, the meme is pretty big. I think there's a reason why it's 20% of my portfolio. Big money doesn't understand meme. Yeah, but there's a lot population out there that sure as heck does, and they're probably throwing around billions of dollars. Would you recommend Ledger? I opt for Ledger. Dylan, mostly ETH and now Sol DeFi users here, and I really can't endorse the Sol UI UX enough. Lovely, it's all good. And my Solana play is Rent. Hey Noah, would you rather buy CVX CRV and invest in WS Ohm? Uh, Invest in CVX CRV with their. I'd rather buy stable coins and get 50% on my money. Anything I do is going to be subjective. Um, It's not for me to say what I'd rather do. I mentioned my portfolio structure. I currently don't own any OM, nor leveraged OM, nor time. I probably regret not getting in on time, like a couple $1,000. But I didn't do it, and that's okay. You can't own everything you want to own. HB, thoughts on Popsicle? I don't see any activity on their site. They haven't launched yet. Um, Ohm, 7,000%. Yeah, it's gonna. People is not insane. It's debasing, and it's gonna go up in value. Then there's a rebase component, and there's bonds. So it's very innovative in many regards. But people see that yield and think that they're going to turn $1,000 into $1,000,000. Doesn't necessarily work like that. You probably turn $1,000 into like $4 or $5,000 at the end of the year at 7,000% APY, considering the debasement. I like the protocol. I think it's very creative. It's ingenuitive. But if you're throwing around like a couple $1,000s in it, I don't think you're going to be making millions, in my opinion. Thanks for the conversation. I look forward to this every day. Much a pleasure. Beazle Irish. I don't remember it, but I think I got you right. What do you think of Acropolis? That's old school. That's from DeFi Summer 2020. Not on my radar currently, but you know, I liked them at one point. Um, Mike Pye. Wow, thanks for sharing your percent. I hope it helps. Doesn't mean much. There's a billion assets out there. Why don't I have Cardano? Why don't I have XRP? Why don't I have a hex position? Why don't I have a lot of positions? You can't own everything you want to own. I have no idea what the best assets are, but these assets best respect my opinion of the market and how I want to attack the market using a business model, generating a revenue stream. I want capital on Friday. I get a paycheck from work on Friday. I want to be able to take $3,000 revenue out of crypto every Friday. And if I can't, it's not a position that I want. If I can't take money out every Friday, I'm doing everything the same as everyone has historically done. I need to do things different. I want revenue streams so they work for me so I don't have to work. And also GMX, I heard about it. Don't forget, lovely. Oh, my NFTs. I do have a nice NFT collection, don't I? I think I spent a little too much on those, but they're very nice. And they make me smile. Those damn fast food punks are awesome. And they're probably going to be worth a fortune at some point. Omis are going to ohm. That's right, Mike Pie. I think bonds as a service is potentially game changing. Um, Absolutely ridiculous concept. That's some next level shit right there. Is 10 billion within reason for AVAX? Yes. I think Polygon almost got the 10 billion worth of TVL when they were hot. Why not? Why not pasta? How do you analyze opportunity cost when chasing optimum yield? Well, if you're getting 20% and there's something over there getting 40 to 60%, and they're both stablecoin positions, probably got some opportunity cost going on. 20% has the opportunity cost. Move your capital over, you get 60% on your money. That's basically what it is. If there's a better opportunity somewhere else, you migrate your capital. No allegiance to an asset. I'm not going to hodl shit. I'm going to capitalize and generate a revenue stream. I hodl revenue streams. I hodl a salary. My only expectation, requirement, and intention is to get money at the end of the week so I can pay my mortgage. Pay my mortgage. I'm going to pay my car bill. I'm going to make good choices so I can do things like that. Noah, where you put your ice and ice and ice. No thoughts on Axion. Crypty. Does the show start at 12? No, 11:30. I'm late. I tried. I have a lot going on. I got to get back to work, but it's usually at 11:30, and I'm usually prompt. Usually prompt. 11:30 every day. I mean, I think I have 450 streams at this point. It's been crazy. Thoughts on this perp DYDX? I don't know, Dylan. I don't have an opinion. But perp is cool, DYD, all that's cool. That stuff is interesting. I don't have positions in any of it. I don't want the volatility. Um, how can I wrap this up? That covers a lot of bases. I talked about the business model. I talked about revenue streams. I talked about you got to get cash at the end of the week. Otherwise, what's the point of all this? Got to pay bills. Maybe some of you got to pay tuition for college. So you better get some cash at the end of the week and stop hoping for something that may come and focus on things that are guaranteed or very highly likely to come at the end of the week. I mean, if you're hoping for $1 million, or you can pretty much get $1,000 to $2,000 a week, I'm going to take the $1,000 to $2,000 a week because that changes everything. That's just my mindset. Anyway, thank you everyone for joining. I got Ask Vids coming. I'm going to put up more. These will be very specific, and I will be showing the screens, the portals of how I entered and exited various positions and how I've structured my portfolio and the things that I've taken. This will be a much more in-depth, pre-recorded video, and it'll be very focused, showing what I clicked on and so on and so forth. I hope it helps. Anyway, 11 p.m. on a Monday, September 27th. As always, thank you everyone for joining. Tell everyone to subscribe. After party on Discord. I wish you all a wonderful day, and I will see you again tomorrow. Peace.